discuss our economic data release on the UK Services PMI. So today I am going to be the one who is discussing the fundamental data and the fundamental part of the release, and then I will give the floor to Alexander, who is about to comment the technical part, market reaction, and possible positive and negative impacts. But okay, just to remind you, so the UK manufacturing PMI Service PMI is an index that measures the level of diffusion index based on surveyed purchasing managers in the services industry. And the survey basically asks purchasing managers to rate the relative level of business conditions, including employment, production, new orders, prices, supplier deliveries, and inventories. So this reading will basically provide us with the leading indication of where the UK's economy is heading, since this sector is the most important one for the nation's GDP. And so this will be quite a turning point. And ultimately, any rise in this figure would be positive for the economy, as it points towards a move back in the right direction for not only the sector, but most importantly, the wider economy. But let us have a look at the historical charts to see what has happened before with this reading. So, just a second, I will just put the chart on the whiteboard. So here it is, and the picture is something similar to the one we saw for the UK manufacturing PMI. So this reading has actually been gradually improving since January 2013, and then it hit 62.5 in November, and then again it fell lower and touched 58.8 the last month. However, if we talk about this month, then let us have a look at what the Bloomberg survey forecast suggests us. So here you can see the top 10 forecasts, and I will also add a great summary where we see that the median estimate for this month's reading is at 59 points, which is slightly higher than for the previous month, as it was at 58.8. So we could expect slight improvement, and I actually wouldn't be too much surprised if the reading would be better than expected, since yesterday we had quite a good surprise from the manufacturing PMI, as the reading was at 64.6 instead of the analyst estimates, which were at 61 points. So I guess that this was all from my side, since we didn't have this question hour fundamental analysis contest. However, you are more than welcome to express your view on how this reading might impact, for example, the Great Britain pound-USD currency pair, or if you want to express any kind of opinion with regards to this. But for now, I would like to invite Alexander to the whiteboard, who is going to then continue with the technical information.
So today, as you already said, we are discussing UK Services PMI, which accounts majority of all economic output, and to be more precise, that's around 78% of the whole UK GDP. So there is a great potential for markets to be highly volatile today. And once again, I support my opinion that data can surprise markets to the upside today, and hence the pound can appreciate versus other major currencies. Therefore, our positive surprise trading strategy will be based on the cable, and the positive surprise trading strategy includes the entrance point at the market price, which is currently 162.94. The potential take profit can be placed at 2-day high, around 163.41, and the potential stop loss can be placed at 162.96. However, I would like to stress your attention that during the last couple of minutes, the pair has been strongly bearish, bearish yet. And the pair has just breached the potential stop loss. Therefore, I guess we need to adjust our trading strategy, and the next stop loss can be placed at a recent low at 162.57 to be more precise. So this level will be, just give me a second, so it's still more than 20 pips to go to reach this level. Yeah. And when having a look at, to be more precise, at 36 pips even though. Yeah. And when having a look at the 4-hour chart, as you can see, the pair has been strongly bearish during the last week. Yeah. And the pair has fallen more than 200 pips. And this week, actually, the pair continued its depreciation. However, on February 4, actually, that would be yesterday, the pair touched the recent low at weekly support at 162.96, and the pair bounced back up to above 163 level. Well, speaking about market sentiment, as you can see, Dukascopy traders are buying the pair in almost 54% of all cases, while average towards the pound is slightly bullish, and the currency is actually bought in almost 54% of all cases across the board, while the greenback is bought and sold in almost equal number of cases. And when speaking about pending orders, we see that in a 50 pips range, around 69% of them are placed to buy the pair, while in a 100 pips range, traders are not so optimistic, as only 55% of orders are placed to buy the pound versus the greenback. So, but nonetheless, the outlook is bullish for the pair, when being based on market sentiment and pending orders. However, speaking about market sentiment provided by other market participants, we see that there's a completely opposite situation, with free brokers having its sentiment index strongly bearish, with Lambda, Saxo Bank, and Daily Fix sentiment index being 62, 66, and 75% respectively. Yeah, and when having a look at technical indicators, we see that also they're speaking in favor of pairs depreciation, as aggregate indicators on the 10 minutes, 30 minutes, hourly, to 4-hour charts are sending sell signal. However, on a weekly chart, the pair is still expected to appreciate, as aggregate indicators are sending buy signal, and meanwhile indicators on the daily and monthly charts are neutral. To finish up, I guess we still have 3 minutes before the news release, and you can have a look at market sentiment with all the crosses with the pound. Actually, the pair is kind of strongly bullish, and even that was still 3 minutes before the news release. I guess markets have already priced in the potential market reaction, with more than 52 pips rally to the upside, and the pair has almost reached the potential takeoff. And by the way, yeah, but nevertheless, as we can see, Euro British Pound is slightly bearish, with 54% of open positions being short. Meanwhile, the Sterling, Aussie, Loonie, Swiss franc, Japanese yen, New Zealand dollar, and USD is slightly bullish, with market sentiment being slightly above 52%. Yes, so the pair is currently fluctuating around 163 level, right at daily pivot, I guess. Yeah, daily pivot. And while we still have 2 minutes before the news release, I would like to stress out that on the daily chart, Euro British Pound is trading in boundaries of the falling wedge pattern, which was formed in October. Yep, and currently the pair is approaching pattern support resistance, which is just 52 pips higher than the market price. And at the same time, Sterling, Japanese yen is not trading anymore in boundaries of the double top pattern, as we can see that on January 26th, yeah, the pair has breached pattern support and still depreciating, losing already more than 400 pips. So the pattern works really well. So when turning back to the cable, we see that markets are behaving rather interesting, and the pair is depreciating already, trading back at 162.94, just slightly below the important psychological level of 163. So just a couple of seconds left before the news release. And I guess we can still monitor cash performance. Yep, and by the way, so the data is already out, and the data came at 58.3, so significantly worse than expected compared to 58.8 a month earlier. So the pound just received a strong bearish impetus, and I guess the outlook for the pair, by being based on the fundamental analysis, is bearish in the short term. Thank you, Maya, for this table. And we see that the pair has already obviously breached the first stop loss and is approaching a new and revised stop loss, which is placed at 162.57. So once again, the outlook for the pair is bearish when being based on the fundamental data. So I guess that will be all from my side, and I'm giving the floor back to you, Maya.
Yes, thanks a lot, Alexander, for commenting on the technical part of this release. So as we see, yes, the data came out worse than expected. Yes, quite surprisingly after yesterday's good reading. But yes, let us see how things go out in the future. But for now, thanks a lot for your attention, and you are kindly invited to watch the JForex webinar in French, and also join our research webinar at 12 GMT. So stay tuned, and see you later.